Welcome back to Investing Talk Podcast. Today we're tackling a question I know many of you are thinking about. Is VERB technology actually a good buy right now? We've got a stack of sources here, financial reports, analyst takes, market data, and our plan today is to really unpack all that for you. We want to pull out the key insights and help you get a clear picture of what's really going on with this stock. Before we jump in though, just a quick ask. If you find this analysis helpful, if it gives you some clarity, please hit that subscribe button, give us a like, maybe leave a comment. It really helps us reach more investors like you. And hey, if you're feeling generous, consider buying us a coffee. It honestly helps fuel these conversations. Plus, seriously, if there's a company you want us to look into next time, drop it in the comments. We do read them.
Yeah, it's a really interesting question about Verb. Because, on the surface, some of their numbers, they look pretty exciting. But as we start digging into the underlying data, what really emerges is, well, it's a classic higher risk, maybe high reward situation. Our goal here isn't to tell you what to do, obviously, but to give you a really comprehensive, unbiased look. Pulling out the crucial bits from all the stuff you've sent us, let's make sure you're properly informed.
Okay, let's get into it then, starting with the basics, right? The fundamentals. What are we seeing when we look at Verb Technology's revenue and earnings? Because like you said, some of the headline figures look pretty dramatic.
Yeah, what's genuinely fascinating is just the sheer speed of the revenue growth. It's almost hard to grasp at first. So Verb reported trailing 12-month revenue of about $2.19 million. Okay, sounds smallish. But then you look closer. Just in 2024, their revenue surged by, get this, 1,320.6%.
Wow, 1,300%.
Exactly. It jumped to around $895,000 from only $63,000 the year before. I mean, that kind of jump is rare, catches your eye. However, and this is the really big but, this massive growth isn't actually leading to profit. The company lost $10.52 million over the trailing 12 months. That works out to an EPS, earnings per share, of negative $13.01. Now, losses have narrowed a bit. The 2024 loss of about $11.5 million was down like 48% from 2023. But analysts widely expect them to keep losing money in the near term. So you've got this really impressive top line, but the bottom line still deep in the red, kind of like a leaky bucket, filling fast but leaping faster.
Quite the contrast. Amazing growth, but still burning through cash.
Yeah.
So how are they keeping the lights on with these ongoing losses? What's their broader financial health look like? Where's the money coming from?
And that right there raises a really critical question about sustainability for you, the investor. Verb's got a pretty small market cap, around $28.95 million. That's the total value of its shares. And crucially, they have very limited, or actually negative, cash flow. So what does that mean practically? It means they're really leaning heavily on the capital markets, raising money by selling more stock, maybe taking on debt, just to fund day-to-day operations. They don't pay dividends, which isn't a surprise, really. And that persistent negative net income just confirms they're burning cash. For you, this flags a pretty significant share dilution risk.
Dilution, meaning my piece of the pie gets smaller.
Exactly. Verb might have to issue more shares to get the cash they need, and that can reduce the value or the ownership percentage of your existing shares.
Yeah.
Your slice gets thinner, basically.
Got it. Makes sense. So a cash-hungry growth phase. Risk of dilution for current shareholders. And they're in live stream e-commerce, social commerce. Yeah. That sounds like a really crowded field. Do our sources say if they have some kind of unique edge, a secret weapon that sets them apart from the giants?
Well, they're definitely in hot areas. Market.live for live stream shopping, go fund yourself for crowdfunding. Those have potential, for sure. And yeah, that huge annual revenue growth shows some traction, right? People are using it.
Yeah.
But the surprising thing is they haven't really carved out significant market share against the big guys yet. Your Amazons, Metas, TikToks.
The incumbents.
Right. The sources we looked at don't point to any clear competitive advantage, no unique tech that really differentiates them. So big picture, they're basically fighting in the super competitive arena, like a digital gladiator match, but without a particularly special sword or shield reported, trying to beat giants with maybe just a regular sling.
That's a good way to put it. Okay, so fundamentals. Explosive growth, but real financial weaknesses and no clear moat. Let's shift from that to how the market's actually pricing them. What are the valuation ratios telling us about Verb Technology?
Well, because of those losses, a standard PE ratio, price to earnings, is kind of useless. You can't really divide by zero or a negative number meaningfully.
Right.
But if you look at, say, price to sales, it's pretty high, especially given their relatively low actual revenue number. And their price to book ratios are actually above the average for their sector. So what does this tell you? It suggests the market is currently putting a premium on Verb. valuing it based more on promise and potential future growth rather than its current assets or earnings. And that premium, especially with ongoing losses, that inherently means higher risk. You're paying up for something that isn't guaranteed.
And speaking of future potential,
Mm.
what about those analyst price targets? I've seen some really optimistic numbers for Verb out there. How do those targets square with the financials we just talked about? Are these analysts seeing something fundamentally different, maybe?
This is where it gets really interesting and honestly, a bit confusing if you're just looking at the hard numbers. Standard valuation models, like discounted cash flow analysis, where you project future cash to find intrinsic value, they're just not practical for Verb. Their cash flows are too inconsistent, too negative.
Can't really model it.
Exactly. Yet, despite that, some current analyst price targets are, well, highly speculative, seems fair. We saw one target as high as $62. That suggests, over 200% upside from where it is now?
Wow.
And another range was like $26.75 to $41.68, which still implies maybe 30% to 70% upside. But our sources strongly suggest these targets look, frankly, incredibly optimistic given the fundamentals. The cash burn, the lack of profit, the tough competition. It feels like these targets might be driven more by momentum, maybe hype, perhaps just wishful thinking, rather than any clear, established path to sustainable profits. It's like the market's imagination is way ahead of the current reality.
That's a huge disconnect.
Mhm.
Okay, challenging fundamentals, speculative valuation. What about the technicals then? What's the stock price itself telling us? What are the charts showing about sentiment and momentum?
Well, Verb's recent price action has been, let's just say, highly volatile, very choppy. Shares right now are trading around $20.42, which is a massive jump up from its 52-week low of just $3.81.
Huge run-up.
Yeah, incredible percentage gain relatively quickly, though it's still below the 52-week high of almost $30, $29.77. Now, technically speaking, sources point to support down at those recent lows, around $3.81, and maybe more recently around $11.82, levels where buyers have stepped in before. On the other side, you've got resistance, where selling might pick up around that recent high near $30 and potentially extending up towards that $41.68 level. So, yeah, it's made a big move, and it's sitting in a really active trading zone right now.
And if we zoom in on trend indicators, is the stock looking bullish or bearish right now, technically? What's the short-term vibe from the charts?
If you look at the simple moving averages, the 50-day and 200-day, they're currently way down at about $7.96 and $6.96. With the price way above them at $20, that's typically a strong sign of a bullish trend, right? Price is well above average.
Sure.
But it also strongly suggests the stock is currently overbought.
Overbought, meaning it went up too fast, maybe due for a pullback.
Exactly. It implies the price rocketed up maybe too quickly and could be due for a pause, consolidation, or, a pullback as buyers take a breather. The RSI, the Relative Strength Index, is at 59.21, getting close to that 70 level, which often signals overbought conditions. Volatility is also super high, 23.63%. Big swings. Overall sentiment is currently bullish based on the charts. Like 57% of recent trading days were positive. No major negative technical signals flashing right now. But again, that high volatility, the overbought reading, means the overall risk here is still really elevated. It's like a fast car going uphill, looks strong, but could easily skid.
Gotcha. Strong momentum on the charts, but flashing yellow on being overextended. What about recent news, or just the general buzz around Verb? Has there been any big catalysts lately besides those revenue numbers?
Interestingly, no. Not really. There hasn't been any major news, no big corporate announcements since their last earnings report. It's not like they landed a huge deal or launched something revolutionary. However, that one analyst covering Verb still rates it a strong buy with that really ambitious $62 target we mentioned.
Just the one analyst.
Yeah, just the one providing recent coverage in our sources. And if you look at social media chatter, sentiment there seems pretty bullish too. Kind of a crowd mentality maybe building up.
Intriguing. One bullish analyst, social media hype, but no real new fundamental news. So any insider action? Are the execs buying or selling? Or is this mostly just outside traders pushing the price around?
Our sources show basically nothing recent on the insider front. No execs or directors buying and none selling.
That lack of buying after a big run-up maybe tells you something.
It's certainly worth noting, yeah. But what we do see is incredibly high trading volume, like nearly 35 million shares changing hands recently. That definitely points towards speculative trading. Short-term players jumping in, jumping out, not institutions building long-term stakes. And just for context, the broader market's Fear and Greed Index, it's currently showing fear around 39. So you've got general caution out there, but this specific stock, Verb, is like this little pocket of intense bullish activity. Kind of stands out.
Okay, so what should investors be watching for next? Any upcoming catalysts that could really move Verb stock, short-term or long-term?
Short term, the big one is definitely the next earnings report, scheduled for August 13th, 2025. Earnings are always huge, especially for a volatile, unprofitable company like this. Could cause a really sharp move, up or down.
Yeah, make or break time.
Could be. We might also see announcements, maybe partnerships for Market.live, or strong user growth figures for Go Fund Yourself. That could spark optimism. Longer term, catalysts would be things like sustained user and revenue growth from new areas, finally showing a path to profitability. That's what could support a higher valuation longer term. And there's always the potential for M&A, right? Either Verb gets bought by a bigger fish or maybe they acquire someone smaller. Given their size in the sector, it's possible.
All right, this brings us to maybe the most critical part for anyone thinking about investing, the risks. What are the key stock-specific dangers and the broader market risks that our sources flag for Verb?
Okay, stock-specific risks. Number one, those ongoing heavy losses and the negative cash flow. That's a huge concern. It's just not sustainable forever without more funding, which leads directly to risk number two, significant dilution from potential future share issues to raise that cash. Hurts existing shareholders. And number three, like we discussed, that high valuation relative to its actual sales with no clear path to profit yet makes it inherently a high-risk bet. You're paying a lot for potential that might not materialize.
Makes sense.
Then, market and sector risks. They're in that super competitive, fast-changing social commerce space. So they're really vulnerable to shifts in consumer trends, changes by the big social media platforms, or just a general downturn in the tech sector. Lots of external factors they can't control.
So pulling it all together now, the explosive growth, the deep losses, the speculative valuation, the momentum, all those risks. What's the overall investment thesis here? And really, what kind of investor, if any, is this stock actually suited for?
Based on everything we've analyzed from your sources, we land on an overall rating for Verb Technology of about 4 out of 10.
Okay, pretty low.
Yeah, and the thinking is pretty straightforward. While, yes, it's got that eye-popping revenue growth from a tiny base, and it's clearly riding some speculative momentum right now, the persistent large losses, the negative cash flow, the complete lack of current profitability, the extreme volatility, and those stretched valuation metrics, they combine to make it a very, very risky proposition. That single bullish analyst, those high-price targets, they just don't seem grounded in the current financial reality or cash flow trends. Any significant upside from here seems to depend mostly on that speculative trading continuing, maybe an unexpected huge partnership, or perhaps getting acquired. It's not built on solid fundamentals right now.
And for you, the individual investor listening right now, what does this mean practically for your timeline, potential entry points, exit points? How do you navigate this?
Look, this stock seems almost tailor-made for short-term trading, specifically momentum plays or maybe trading around specific events like earnings. It is absolutely not suitable for long-term buy and hold investing, given the high risks and the lack of profit. Just isn't.
Got it. Speculators only, basically.
Pretty much. For aggressive traders, maybe consider entries near those support levels we mentioned, maybe around $11 to $15. Where buyers showed up before, definitely avoid chasing it way up here above $25, $30. Too much volatility, too much resistance overhead likely. Aggressive traders might set a really tight stop loss, maybe $9.50, to cut losses quickly if it turns. More conservative traders, maybe $14, $15 as a floor for taking profits. A first reasonable target could be back towards those recent highs, maybe $28 to $32. And for the really high-risk takers aiming for the moon, you could target $41 to $62, matching those analyst calls. But please understand that is extreme risk. It relies entirely on the speculative fever holding or even increasing. It's a pure gamble at those levels.
Wow. Okay, that was a really thorough breakdown of VRB technology. It's so clear that while those growth numbers absolutely grab your attention, generate buzz, the underlying financial health, the risks involved, really demand a huge amount of caution.
Absolutely. And this case really drives home a critical lesson, I think, for all investors. Flashy top-line growth, however big the percentage is, doesn't automatically mean it's a good investment. Not without a clear path to actually making money, to sustainable cash flow. It really forces you to think hard about your own tolerance for risk, right?
Yeah.
Your comfort level with wild swings versus just pure speculation.
Exactly. So What does this mean for your portfolio listening right now? Are you that short-term trader, comfortable with the crazy volatility, ready to jump in and out? Or are you looking for long-term stability, actual profits, steady growth? Knowing your own style, your own goals is just as vital as understanding the company itself, maybe even more so. This isn't just about Verb, it's about what fits you. Thank you so much for joining us on Investing Talk Podcast. We really hope this analysis helps you make more informed, more confident decisions out there. Remember, knowledge really is your best asset in the market. Until next time.